Hi everybody, my name is Mary Redmond. I'm talking right now about the Australian dollar, US dollar, and the reason I favor this pair to the downside for this week is I believe that we've seen a true change in the trend in the stock markets and also in the commodity-based currencies, risk-based currencies such as Australian dollar, New Zealand dollar, and Canadian dollar. And a real change in the trend usually catches most people off guard. Even some very good traders often miss the first day or the first week of a trend change. But I don't think this is just a pullback in the stock markets which is going to reverse and start moving back up again. I think there are a number of factors that are contributing to a change into a true bear market, which could be a more serious pullback. And if you look at a weekly view of the Dow average, in order to see a reversal back to an upward trend, we would need to see a real reversal candlestick on both the daily and the weekly charts. You need to see a big move down like we did see here on Friday, followed by a bullish engulfing candlestick, which would take it all the way back up to probably the 12,000 level. And what you're also seeing with both the Dow and the S&P on a point and figure chart, you're seeing an extreme level of bearishness for point and figure, which does show some accuracy, particularly with the stock market. So what we're seeing here is a real breakdown, and we're seeing another price target in the 1140 level. I think it's possible that in the fall, the big market crashes usually occur in September and October. I think we could see more of a pullback, but despite that, we've also seen some other important indicators of the market which show that we could be into expecting more of a serious pullback. So if you look at copper prices, and copper is often a harbinger, or it's a true leading economic indicator because of its use in industrial materials and semiconductors. Well, copper made a big pullback in the last week. And you can see this on a couple of charts, and it looks as if it has much further downward to go, and that's going to have a big impact on the commodity-based currencies. See, this was a big pullback, and this is probably something that's not happening just because of the continued problems in the EU. It's probably happening on a global basis. You're seeing the effects of the long-term Chinese interest rate hikes starting to take effect and impact Australia's growth. You're also seeing the end of the quantitative easing from the Fed, which is affecting all the financial markets. And you're also seeing that the European problems are really starting to spiral out of control again. The European LIBOR rates, the Euribor rates started to spike up with the volatility index. And the G7 ministers are having some type of an emergency conference this weekend. But I don't believe that this is a problem which is going to be simply solved. I think it's something that's going to continue to exacerbate and get worse over the next several months. So the Australian dollar moves in very close tandem to the stock market. And looking at the Australian dollar now at a monthly chart, you can see that it did break out of one very steep upward trending line. And it has yet to break out of the longer term upward trending line, which would come in around parity. But on a daily basis, it's gone below its 100-day and its 50-day moving averages. So if it were to break below its 200-day moving average, that would be further confirmation of the trend. But one thing that you want to take into consideration, if you look at what happened on Friday in the stock market, the market was down 200 points at one point. And the Dow average did turn around and go back up again and close slightly positive. Well, you can look at what happened to the Australian dollar. It did go lower. It reached this important support level right below 104, and it moved up again, but it couldn't really manage to close positive or stage any type of significant rally. So, and today, even despite the S&P downgrade, the Australian dollar is still struggling to maintain any upward momentum. So the other thing we want to consider is that nobody really knows exactly how the markets will react to the S&P downgrade, but the S&P did affirm the U.S. short-term debt ratings So there's probably not going to be big liquidation of US dollars or dollar-based assets by the money market funds. And that's what's really important, because when investors start to get frightened and they're liquidating their positions and they just want cash right away, then the money goes into the money market funds, which is essentially a buying of dollars. So I think that there may be some overreaction. Nobody really knows how the Standard & Poor's downgrade is going to affect the dollar. But they're not really saying anything that people don't already know. I mean, people already know that the U.S. has a problem with its long-term debt. But this doesn't really appear to be have an impact on the short-term money market funds, so that's very important. So what you also want to see for the Australian dollar, if you keep an eye on the volatility index, or the VIX, what's happened over the last, really, from the period of August of 2010 up till the end of June of 2011, we had a really strong move towards risk assets and towards the stock market and towards the currencies like the Australian dollar. And during that period of time, if you look at the VIX, anytime the VIX spiked up like this out of its Bollinger Bands, then that would be a good buy for the Australian dollar as well as the stock market. But if we're transitioning to a bear market or a new trend, then what you want to do is, if you're interested in selling the Australian dollar or selling the market, what you want to see is a pullback in the VIX. Now, this spike up in the VIX did cause a market rally on Friday. And you can put up a short-term chart of the stock market, and you can see that that particular move up in the VIX did cause a move up in the stock market. But on the other hand, what you really want to do now is to look for a pullback. If the VIX were to say to pull back to a lower level, maybe even below 30, that could be a good possible level at which to short the Australian dollar. And of course, this is going to be a week with the Federal Reserve meeting. So a lot of market participants are anticipating that the Fed is going to begin additional quantitative easing right away. So I don't think that they are. I think that Mr. Bernanke made it pretty clear that the last time, the reason they began the quantitative easing was primarily because they were seeing widespread deflation, and they're not really seeing that anymore. And I also think that they're concerned about the stability of the dollar, as are other global central banks. So the rate expectations for the Australian dollar have been ratcheted way down in the last several months, and they're also basically anticipating an actual cut from the RBA in the coming 6 months. So this is going to add to the downward pressure. So I'm thinking if we do get a spike up, and it looks like we might not, but if we do get a spike up, I would be inclined to short again, as I do also have a small short. And a real break below the 200-day moving average, which could come in around 103, would probably be further confirmation of a downward trend. So with the stock market breaking down and increased fear in the market due to the European financial problems, I think that the short in the commodity currencies is going to be a good play for the next couple of weeks. And this is one of my favorite ones.